Ladies and gentlemen, good day and welcome to Share India Securities Q4 FY22 earnings conference call, hosted by Antique Stock Broking. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Ms. Vidhi Shah from Antique Stock Broking. Thank you, and over to you, ma'am.
Thank you. Good evening, everyone. We have with us the entire management team of Share India Securities, represented by Mr. Kamlesh Shah, who is the Managing Director, Mr. Rajesh Gupta, who is the Non-Executive Director, Mr. Sachin Gupta, who is the CEO and Whole-Time Director, Mr. Vijay Rana, who is the CFO, and Mr. Anubhav, who is the President. We also have with us Mr. Kunal Nandwani, who is the CEO of U-Trade Solutions. With this, I shall now hand over to Mr. Kamlesh Shah for opening remarks. Over to you, sir.
Yeah. Thank you, Vidhi Madam. Good evening. A warm welcome to Investors Meet. Financial year 22 has been one of the best years till date, where all business metrics have delivered robust growth. Share India is focused on profitability and sustainable growth with technology at its core. Talking about performance for quarter ended March 22, we have achieved revenue of 293 crore in March 22 compared to 191 crore in March 21. This is highest ever revenue in one quarter. Profit before tax increased to 100 crore compared to 43 crore. Profit after tax also increased to 75 crore compared to 36 crore. Coming to key operating ratio, that also has shown reasonable improvement. Operating profit margin has increased to 37.7% compared to 29.2%. Gross profit margin has improved to 35.5% compared to 24.7%. Net profit margin has increased to 26% compared to 18.7% in March 21. This has resulted in EPS of 23.57 per share for the quarter ended March 22. Now coming to the annual performance review. Total revenue has increased from 453 crore to 871 crore, an increase of 92%. Profit before tax of 266 crore compared to 103 crore, an increase of 157%. Profit after tax of 201 crore compared to 81 crore, an increase of 150%. We are in IPL season, and in line, we are also dealing in centuries. You will find many centuries in terms of growth and profitability achieved consistently for last 3 years. Inspired by the century, our March quarter PBT also has scored mark of 100 crore. This makes us winner in all the 3 formats: PBT, PAT, and revenue. Share India has outperformed BSE 500 in each of last 3 annual periods. Just to give you an idea, Share India has given return of 202.45% in 1 year compared to 7.47% given by BSE 500. Comparing 3 years period, the outperformance is glaring. Your share has given return of 1,033% compared to 48% of BSE 500. We are ranked 38 out of 566 companies in finance and NBFC sector. During last 2 years, we have seen many regulatory reforms, and we have welcomed all these reforms. These reforms has led to increased activity and investors' confidence in the market. Especially, I would like to mention about pledge replace system. Now, this has eliminated most of the risks associated with the shares lying in broker's account. Now, with the facility of pledge replace, client can happily trade and place the margin by the way of pledge. The shares will remain in his account only, and it will be utilized only when he trades and to the extent of his margin requirements. Another reform was 100% upfront collection of margin. So both in cash segment as well as in F&O, upfront margin has been made mandatory. Now this has also worked in favor of all the stakeholders, especially clients, because this has reduced the leverage, thereby the risk in the volatile market conditions. Going forward, also we feel confident. When we perform better, the expectation goes high. We are prepared and we have taken a lot of initiative to see that we are future ready. We have one subsidiary called Total Commodities Private Limited, and which is a 100% subsidiary of Share India. We have taken a new membership in this company just to cope up rising requirement as per the growth in the turnover and overall business. We have very large market share in all the segments. Equity derivatives. In equity derivatives, in option segment, we are commanding more than 8 to 9% market share. Likewise, in commodity, currency, GIFT City, everywhere we have sizable market share. We have a very unique business model. Our business model is totally opposite to very retail brokers like Zerodha. So this gives us a lot of opportunities, and this isolates us from the risk of the business. We are also prepared with new product launch. In the second quarter, we are going to launch IBT-based product, and maybe at the end of the second quarter or at the beginning of third quarter, we should be coming out with algo products for retail investors. We are also excited at our development at GIFT City. As per the sources and as per the discussion with NSE, SGX Nifty is likely to be launched for trading in GIFT City from July 2022. This will open up new opportunities for us as we are already a large player at GIFT City. All this is possible because of the technology. We believe that technology is at the core for the growth that we have achieved and going forward also. This associated with robust risk management system makes us future ready. We have unique risk management system which incorporates advanced features like stress test management, whereby it can tell you in advance if the market moves by 2, 4 or 6% on either side. Now this feature will also help us to see that the risk for the client also is minimized. So we are always 2 steps ahead when it comes to risk management. So the management is taking all care as we are growing further. With this, I would like to request our Director, Mr. Rajesh Gupta, who is heading our NBFC company. Over to you, Rajesh bhai.
Okay, thank you, sir. In the financial year 21-22, the loan book of the company has increased from 78 crore to 194 crore, with percentage increase of 148 crore. Our loan book consists of mainly 2 segments. One is personal loans of small ticket size, and the other is SME loans. Currently, we have started our operations in Haryana also, along with UP, Punjab and Delhi, where we were already operating. We have 31 branches as on today. The company has disbursed 35,000 loans in financial year 21-22 and closed about 14,000 count successfully in this period. Active loans as on 31st March 22 were more than 37,000. Our PAT has grown by 134%, that is from 8.41 CR to 19.68 CR during this period as compared to the previous year. NPA of the company are again very low, that is below 1%. In the current financial year, we hope to take our loan book to the tune of 300 crore with 150 crore in each segment, that is SME segment and retail loan segments. Thereby, by opening 15 more branches, thereby expanding our operations in the new areas. That is all from my side. Now I hand over to Mr. Sachin Gupta to take this meeting further. Over to you, Sachin ji.
Good afternoon, everyone. Thanks for joining for the investor call. As promised earlier in the earlier investor calls, that Share India is looking for the diversification to the digital world. So digital transformation journey has already started. We have launched our IBT product internally for the testing, where our team and close clients have started working on it. And we hope the final product should be launched, as Kamlesh sir explained, in Q2. And we just want to wait for the final product to be launched for a quarter. Like final product is algo product for the clients. The dream we all are having in our mind is we want to empower retail with the algo trading through the mobile. So we all are working day and night towards that goal. And we just want to have a break of a quarter before launching the final product, just to see that everything is working fine before the final product has been launched. So Q3 is a quarter we are targeting to launch our final algo product for the client. And the important part is, as far as customer acquisition is concerned, we don't have any large plans for the big capex. As U-Trade is an integral part of the company now, and they have the history of 10 years, and Share India has its own history. So tech team is with us, strategy team is with us. So we believe that capex side we don't have to put in a lot of money. So keeping that in mind, for customer acquisitions, there are 3-4 things we are focusing on products for customer acquisition. Like I said, algo product will be our main product for customer acquisition, and where like U-Trade will help us in coming up with the fastest possible back testing results. Forward testing, which we call simulation in our language. Simulation will be available. It will be very helpful for the newcomers, like students, like housewives, like anyone who want to just start their strategies in the market. They can forward test with the live data. I think that will be the great feature in our product. And some products like drag and drop coding system, where a client can code their own strategy by a very simple manner. Yes, we have to do some OPEX. There is no question about it. But again, that numbers will not be so high, which will hurt our balance sheet. So idea is we don't want to burn large number of money to achieve our goals. So keeping both things in hand, keeping balance sheet performance in hand, and still diversify to the digital world. That is our goal. So idea is to maintain our market share and maintain the current business growth, diversify to the retail market, which will give us the more sustainable model. And Share India will be a unique company, I believe, where the company will be having a sizable share in all the segments in turnover, and also will increase our market share in retail and HNI business. That will be a unique positioning for a broker. As sir has explained, the numbers were fabulous, and NBFC business is doing good. So that's it from my side. Thanks a lot, everyone. Now I request Vidhi ma'am to open the platform for Q&A.
Thank you very much. Ladies and gentlemen, we'll now begin the question and answer session. Anyone who wishes to ask a question may enter star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are also requested to use handsets while asking a question. Anyone who has a question may enter star and one. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Asim from ITI Alternate Funds Management. Please go ahead.
Hi. So firstly, congrats on an excellent set of numbers. So I have two questions. First is, how is Share India planning to leverage the acquisition of U-Trade, and what are the forecasts for this quarter from U-Trade business?
I think first part could be taken by Kunal, and the second part can be taken up by Sachin ji.
Sure, I'll go first. Kunal here. Hi. Thanks for the question. Basically, as Sachin mentioned briefly, that Share India has a history of trading securities and primarily driven by algos and technology for over a decade, for multiple decades, and U-Trade has also been building for decades the institutional grade algo trading platform for many brokers, banks, stock exchanges around the world. So with Share India and U-Trade joining hands and working so hard on the platform, what we are essentially trying to do is, what Share India is essentially trying to do is bring the institutional grade platform to retail investors on a mobile app. That is completely something which is unheard of before and unimaginable in grand scheme of things, and that's what we are trying to achieve. That's a dream we have, and we believe we are very close to launching it in a couple of quarters or so. It's going through a rigorous amount of testing, and how we make a retail platform which would be not only used by hundreds or thousands of clients, but possibly reaching lakhs to millions of customers eventually. That's the goal over the next few years. I think with the U-Trade technology and the Share India expertise of the proprietary algos, the way traders trade, what investors may want, how to protect their interests, how to use technology to automate things for them, how to automate the decision making, get the lowest latency, fastest speed possible, enhanced risk management. All these skills is what Share India has been deploying in their business for a number of years and decades. And through U-Trade, we are now making it consumer ready, mobile app, simplifying it for the end user. So that, so I think that's how Share India is leveraging on the U-Trade team technology into bringing this platform to the retail investors of India, which hopefully would be a great moment for the whole market. That's what I can briefly say. On the forecast, maybe Sachin or whoever else wants to take it.
Abhinav, can you please take up the question?
Yeah. Hello.
Yes, sir. Yeah, go ahead. Abhinav, we can hear you. Go ahead.
Yeah. So thanks for the question. I think as far as the forecast is concerned, as already explained by Kamlesh sir and Kunal, we are planning to launch, a mobile ready app for consumer by the Q3 of this financial year. The idea is to bring the institutional grade technology to the consumer who has still been deprived in India about the algo trading. There's a lot of enigma currently associated with algo trading in India specifically. A lot of interest is being generated amongst the millennials, and we believe that we are very uniquely positioned to cater to that demand. As far as the forecasting in terms of numbers is concerned, we will initially launch our IBT platform, which we are targeting Q2. We will launch our algo platform by the time, and during that time, we intend to build a sizable chunk of customer base. Financially, the numbers for both IBT platform and algo platform should start coming only from the next financial year, which is financial year 24. We believe that in this product, we will have real value for the consumer. So for the consumer and for the company as well in terms of financial numbers as well. So that's from my side. Thank you.
Thank you. And lastly, the broking industry has done very well recently, and even the exchange volumes have been very high. So what is your industry focus when the uncertainty is now at the global level?
Sachin, would you like to answer or should I answer?
Sir, sorry, I didn't hear it properly. Can you please repeat your question?
Yeah, sure. So the broking industry has done very well recently, and even the exchange volumes have been very high. So what is your industry forecast given the uncertainties that are surrounding us at the global level?
Sir, see, what we all are seeing that since last 3 years, industry has seen an unprecedented growth year-on-year basis. So especially after post-COVID, we have seen, participation has grown up like more than 2.5 times. Volumes, exchange level volumes have grown by 2 to 3 times. So what we believe that many new regulations are coming up this year, and yes, you are right, global challenges are there. So we believe there will be some challenges on the participation side. There may be, and we all are ready for that. I think tech is the only answer to that, and we don't expect that market to grow with the same pace as it was growing in last 3 years. So we are very practical with the things we are seeing. So we need to adapt to the new margin regulations from the SEBI side, and changing environment. We believe that things will slow down a bit, but again there is a lot of headroom left in the market where people are looking for the innovative products. So this year at Share India level, we are focusing on the innovative side, where we can bring up good products for the clients. There we can see some attraction to for the Share India in the market.
Sachin, may I add some few points here?
Yeah, sure, sir. Sure.
Yeah. See, during last 2 years, we have expanded our product portfolio, and now we have complete range of products available, which will give us some kind of protection against any downfall in the volume in the market. Secondly, as Sachin has said recently, that the new product like algo products and everything is lined up, so that will also give us some extra headroom for expanding our volume. Nothing is permanent, as we believe that the current factors like the interest rate hike, the inflation, the crude price, as well as the war with Ukraine will come to an end at some point in time. So whenever the normalcy returns, this will bring back the volumes to the market. All economic indicators are positive, like GST collections are at highest level, tax collections are at its best, retail participation is increasing by leaps and bounds, and for that matter, if you take any 10-year period, the market has always grown by 15% compounded return. And just to simplify the query, if you consider period of 2002 to 2022, in year 2002, the index was 3,600. And today the index is around 53,000, even after the fall. So I believe that this is a market where there will be a lot of new interest, the new age investors have come in, and this will provide enough fuel for us to grow further in the financial products. Thank you.
Thank you so much for an elaborate answer. Thank you.
Thank you. Before we take our next question, we would like to remind participants to ask a question, you may enter star and 1. The next question is from the line of Amit Vora, an individual investor. Please go ahead.
Good evening, gentlemen. First of all, congrats on a great set of numbers and your continued execution that you have been doing very well. I have 3 questions. If time permits, I'll ask the third one. The first is, if you can give us the revenue breakup for the segments.
I think you can take up this matter.
Yeah, so for quarter 4, the prop business did revenue of around 55%. The client-dominated business would have been around 36-37%, and rest NBFC, technology and insurance would have combined taken around 8 to 9% of the business overall pie in terms of revenue.
And this is for the financial year or the quarter?
This is for quarter 4. Since a lot of clientele business has started coming in from financial year, beginning of the financial year, so fiscal year 22 numbers would be, breakup number would be prop business would be around 60%. The client business would be around 34%. And NBFC and technology constituting another 6-7% of the business.
Is it okay for you to give the margin percentage each segment wise? What would be the margins if that's possible?
Yeah. So see, there's a lot. The breakup of margin is a very complicated endeavor in terms of the fact that we need to allocate costs on the basis of the volumes that are being done on the exchange level. But just to give you a breakup of the idea.
Ballpark number will be also good enough.
Yes. So I'll give you a ballpark number. So the client-dominated business would be doing a PBT margin of around 25-26%. And in the prop business, we would be doing somewhere around 21-22%, somewhere of that sort. And the rest, NBFC, this year has been a very good year, but we expect to do a margin of around 30-35% over there as well.
Okay. What would be your current, client strength, if that you can just explain that a bit?
Sure. So the total number of retail clients are 17,500 as of 31st March. We are continuously adding new clients. That is happening. We have, of course, the big development in this front is that in the last year we added, as we have been saying for the last 8 quarters, that we are focusing more on institutional side. So we added 10 FPIs last year, and within this quarter itself we added 6 more FPIs.
Great. And what would be your expectation on the momentum to continue? Any number that you're working with for FY23 that 17,500 should grow to?
So, the 17,500 has a lot of legacy business attached to it. As everyone said, that we are planning new launches in Q2 and Q3. So I think as far as retail number is concerned, we expect a big jump this year as far as the total number of clients is concerned. Of course, financially, as I said earlier as well, they will start making impact from the next year only. I think by the time we launch our product, stabilize, and start doing the marketing around it and gain a critical mass, it would only be next year when we would be able to see a financial impact of the growth in the number of clients.
All right. One more.
I would like to add, few clarifications. To compare the client number, we need to understand the business model that we are operating. Currently, we are operating on B2B model, whereas we have very large clients like FPI, some of the brokers, large business group, HNIs. That is the composition. In fact, our turnover is more than Zerodha's turnover. We have around 9% market share in NSE option contracts. So for us, number does not matter. For us, the specialization, the composition of clients, and the kind of strategy-based work that they do on our platform, because of various advantages that we have, like concession in transaction charges, very robust techno platform. So our business model is different. I thought I'll just clarify so that you don't compare the number of clients with other organizations, because the business model here is unique. When we
I understand that because that's the reason I did not compare it with anybody. I wanted to just understand is there an internal estimate? I absolutely get that.
Right. Thank you very much.
We are expecting with the new launches, this is Sachin Gupta, we are expecting that retail number should go, in this financial year, retail number should grow by 2 times to 2.5 times in this financial year. The number 17,000 should grow to at least 35 to 40,000 number by the end of this financial year. This is our expectation. This is where we are working.
Understood. Got that. One last question I'll squeeze through and then jump back in the queue. Apology if I am asking this because my line got disconnected in between. Is there a strategy or something that we have in plan to counter this new age discount brokers in the industry?
Sachinji, you can answer
Sure.
this.
Sir, as I explained in my remarks that our customer acquisition strategy is by providing the innovative products to the clients. See, people these days, they don't want, they are doing that, they are buying Tata Steel and Infosys on their own, but they want some knowledge, something from the broker side. So what we are doing, we are leveraging our expertise of Share India and U-Trade, as Kunal explained that institutional grade product to the retailers in their hand. Everyone wants to use algos because making regular money is the main goal. People are not here to lose money. So we are trying to enable clients to use the sophisticated algo through their mobile. So that is one where we are not I don't think we'll face any challenge from the traditional what do you say, discount broking houses. So one. Two, like technology side again, as I explained that number of people approach us where they can do simulation trading, like students and people who are newly entered in the market. Again, we will provide them with the live feed, which will be simulation, good backtesting engines, where the backtesting results will be immediate and reliable and easy to code strategies. So all these value additions we are trying to add to the client's life, where we believe we can have our own share from the market. So we are not focusing on cheap products or products for free. We'll charge some money for that, but definitely technology will add a lot of value to the client's life.
Yeah, one thing follow up on the same is there a budget or something that you have worked on that this is what we are going to spend, irrespective of how many clients board onto the platform, but is there a budget in the mind if are you in a position to talk about that? Basically, I'm trying to understand, is there a customer acquisition cost that you have worked on or something?
Abhinav, you want to answer that?
Sure. So you're absolutely right. I think your second question is a derivative of your first question, that how do we compete with the new age discount brokers who are just burning money. So, as we have already clarified in our earlier con calls as well, we are not here to burn money. Of course, the customer acquisition cost would be dependent on the unit economics. The burning cost would not be taken on the balance sheet. We are very clear on that aspect as well. So we have allocated certain budgets internally, but with each and every year that would be reviewed by the board as things progress. What I can say about the budget in the public domain right now is that those numbers will not be high to impact the overall financial strength of the company. We believe that we, as we did around 200 crores of PAT of this year itself, the whatever OPEX that we have to take in terms of marketing and HR would be very minuscule in the overall grand scheme of things as far as the cost is concerned. Point of note that I would like to make here specifically is that, a lot of capex that would have been done just for the launch of product or the creation of product has already been done within the ambit of Share India and U-Trade combined. U-Trade has been doing an algo trading platform work for more than a decade. Share India has been in the terms of strategy for the major part of last 1.5 decade. So a lot of capex in terms of product development has already been done, has already been taken. So, and as far as the customer acquisition cost is concerned, it would only be a very minuscule in the overall grand scheme of things.
Yeah, and this cost has been expensed or capitalized till now, whatever you would have done?
So as you can see in our total balance sheet, the total asset size is very small. So, yeah. When I say for the last 1.5 decades, most of it, even if we would have capitalized earlier, would have been taken into expense now. So our total balance sheet size, a very minuscule part is in the total, tangible assets. So most of it has been expensed already.
Yeah, one last question, if I may squeeze in.
Just to clarify, when we talk about product and the creation, a lot of it is more about intellectual investments rather than, just pure play hardware investment. So it's more about creating those kind of strength and those kind of teams and internally, which are more difficult to do rather than just pure play creating property, plant or equipment kind of a balance sheet item.
Right. I mean, one last question, then I will just jump back in the queue. In your presentation, you have mentioned in the vision and the future plans that international expansion you plan to do, enter some new geographies. If you can just, just give some, throw some light on that.
Sachin, you would like to take the question and then I supplement it.
Yeah, there are two aspects of this thing. One is the expansion of Gift City, where we have access to all the international markets through the IFSC zone. So we believe that opens a gate for the companies like us, where we can have access to the international market from that side, and we have a good presence there since the inception of the Gift City. So we believe that the kind of strategies we are using here, we can take those strategies to the international world and explore the chances with the new markets. And secondly, we have a subsidiary called Share India Global based in Singapore. So using that entity also, we are trying to explore more opportunities into the other markets. So next financial year, this financial year, the goal is to diversify into non-core areas where which the sustainability is the main thought. So like we all explained about the retail side. The second is the international markets. We just want to see the opportunities in the outside markets, like starting from the SMP. So like they have short-dated products. So we are more interested in short-dated products. So we'll start some business in the international markets very soon.
Great.
Here I would like to add some more points for Gift City especially. As I mentioned earlier, SGX Nifty is coming to India from July. Now currently 60% of volume in Nifty is traded at SGX, and 75% of open interest lies at SGX. So we will have a great opportunity to deal in this product. Again, this is a joint venture between ST and SGX. So they will also bring in more products like Bank Nifty options, weekly options, and kind of things. The beauty of the place is that the cost of operating from Gift City is 1/10 compared to the cost of operating from Singapore. Say, for example, if I have to open a shop in Singapore, the cost could be 10 times more than what I may spend at Gift City. Now, again, the advantage and the benefits granted by the Government of India, there is no STT or CTT, there is no GST, the transaction charges are minimal, and even the taxation is waived off. There, all we require is just 9% MAT, that is 50% of the regular MAT to be paid. So this offers a great opportunity for us, and we are operating there for a long period of time. So there we have sizable presence, and we would like to expand our turnover from there. Thank you.
Thank you so much. That was a very well explained, vision. Thank you. Thanks a lot. I'll join back in the queue.
Thank you. Any participant who wishes to ask a question may enter star and 1 on the touchtone telephone. Ladies and gentlemen, if you wish to ask a question, you may enter star and 1. As there are no further questions from the participants, I would now like to hand the conference back to Mr. Sachin Gupta for closing comments. I'm sorry, sir. Before we proceed, we have a question from Ms. Vidhi Shah from Antique Stock Broking. I'll just hand over to her first. Ms. Shah, over to you for a question.
Yeah. Thank you for the opportunity. Sir, so I just had one question. You said that your acquisition cost will be quite low, but how do you wish to still acquire, like what will be your sourcing channels, and obviously that will bear some cost, right, when you acquire those retail customers. So how do you plan to do that? And also, do you have in mind what will be your break-even period after acquiring these customers?
Abhinav, would you like to answer?
Sure. So, ma'am, as you have rightly pointed out, initially there might be some cost associated in terms of customer acquisition cost. But as we have already explained that most of the customer acquisition cost, we want to keep it low by the virtue of bringing out a product which is more unique and plays on the strength that Share India already has. It's not about just doing pure play broking industry, which is where most of the players would be competing with. We would be playing to our strength where we have knowledge of algo, we have created a product or created an expertise of strategies that we have been offering for over the last 15 years or so. So most of the customer acquisition cost, we believe that would be very low in terms of the fact that we have a very unique product, number one. Number two, even if you listen to Sir's forecast, I mean, all the consumers that we are targeting for this year is not a very high number in terms of, so whatever we are targeting for the entire year in comparison to the entire industry landscape, that's a very small number. So for year one. Number three, in terms of break even, as I said, we would be continuously reviewing the performance of every business channel we acquire. We believe that the first consumer should break even in around 12 to 18 months. But of course, as we gain more traction, those numbers should shorten a bit. We would completely base our business decision on unit economics, and we believe that would be the way that will go forward.
Okay.
Here the beauty of the product is this is algo-based product, which is a unique product. So that way also lot of interest is generated. We had done before 5-6 months program on GTV where we had algo key masterclass. So that itself gave us a lot of confidence in terms of customer acquisition, because a lot of people have shown interest. This is a unique product, so the cost of acquisition would be different from the traditional acquisition. So I thought I'll just add a point here. That's it. Thank you.
So basically, I understand that right now we are currently having some 17,000 retail investors, customers. And slowly, I mean, this number can easily be, like you can easily acquire 35,000 next 1 year or so. But just looking at the larger picture, if you plan to have a huge, strong customer, retail customer base, then how do you strategize this going ahead? Like for example, if you see ISEC or Zerodha, their customer segment is quite huge. So do we plan to become so big enough, and if yes, then how do we strategize this going ahead?
Do you want me to take, sir, or Sachin, sir, you?
I will add something, then Abhinav, you can carry on. See, ma'am, idea is that being a responsible company, we don't want to we need to strike a balance between customer acquisition and profitability. So for the customer acquisition purpose, we cannot burn our money, and it will be very negative for the company. It will be very negative for the shareholders. So what the broader idea is, we will strike a balance between the profitability and the customer acquisition cost. That's why I said the number like 35 or 40,000, hardly 2 times or 2.5 times, because we don't want to go very aggressive with the customer acquisition thing. We just want to keep on tracking the performance of the products of that new business line. So the idea is we need to go slow. We don't want to go into that 50 lakh or 1 crore number so early. So we want to go slow. We want to grow organically, and yes, it will not be that slow that people will not see any growth in retail business. So idea is that Share India should be a sustainable company. See, what we believe in next 5 years or 7 years should belong to India as a whole. So larger aspect, we believe India is growing like anything. So next decade is this decade particularly belongs to India. So public participation will grow drastically from here. Maybe, little bit bumps because of the regulation issues or because of the market. But in larger aspect, market will grow. So next 5 years, we believe that kind of demat accounts we have around 10 crores, it should go to 25 crores in next 5 years. So Share India, why to miss on that side where huge participation is coming? So for that, we need to take some cost on the balance sheet, but equally we don't want to burn so much money that it takes us into the negative growth territory. So we'll keep the balance and we'll go as organically as we start the growth of the acquisition. So don't want to burn a lot of money with that. So that's the whole idea. Abhinav, you can continue, please.
Yeah. So as sir explained, beautifully explained, we believe that India's story is not only for a year or two, it is for a decade or so. So we are very consistent in our belief internally as well that the good businesses are built for decades and they're not very short-sighted in their number of approach or anything to begin with. It's very easy to burn money and acquire customers, but it has been our history, and we very strongly believe internally that we will do unit economic positive business throughout our life cycle. And what we are trying to build here, and even the names that you have mentioned, like ICICI Direct or Zerodha or any other competitor you might have, those businesses have not started in a year or two. They have not got that kind of customer traction in a year or two. The initial period was tough. They were launched more than a decade back, and it's only by the time that you reach that scale and size that you will start seeing a big size number of customer segment in that respect. So we believe that will be a market player of size in few years. But whatever new products that we are trying to launch is not from a very short perspective. It is from a decade long story perspective for India.
A couple of points here.
Sure, please, Kunal. Please go ahead.
Yeah.
Kunal, please add that.
Yeah. So, guys, I want to, based on this question and one of the previous ones, I want to give an analogy which will hopefully help you understand this better. So, we are looking at the broking industry from the perspective of Zerodha, ICICI Securities, or maybe even some VC-funded companies like Grow or Upstocks and others. But the way to look at it slightly differently, maybe, and I'm trying to explain. So, think about Apple as a smartphone company versus Android. Of course, Android companies may have bigger market share. Samsung might be selling more, but it's a very commoditized product. There's no differentiation. There is no focus on as much product as others. It's just copy and marketing in grand scheme of things. I'm just simplifying. But Apple still, even by selling, maybe focusing on 5% of the market or a smaller percent of the market, but they're able to price it better. They're able to target the customers who are benefiting from the product and paying a premium for it. That's sort of a way to think about us versus the others, hopefully. And if our market grows for the algo trading driven by regulations and regulatory support and client adoption, and the current market dip is likely to help, because the market last 1-2 years, all the retail investors, many of them who come to the market were only buying, broadly speaking, simply put, they were mainly buying stuff and just holding and making money. But now that the markets are going to go up and down with volatility, they do need algo products to generate some return and not just hold and stay on one side. So they do need help from technology, from a technology perspective, algo perspective, etc. So sort of what we are seeing and hopefully expecting in the next few years, starting now and soon, is the rebate of the phone industry from 2007 as the smartphone industry came about. The Nokias and Motorola's got knocked off in some sense. New World came, Apple, Samsung came. That's how we are also forecasting and seeing that there will be a algo trading driven, technology driven industry where hopefully we will do well, and our focus may not be necessarily in getting millions and millions of customers, but even if we get a few lakhs customers over a period of time and they are able to have some model in which they can pay us well while benefiting from the products and getting decent returns or their expectations met from the market, that's how we should think about it. It's not a one-to-one fair comparison as such, right? I hope I've tried to simplify things. I hope it makes some sense. Thank you.
Yeah, that was quite better explained. Thank you. Inga, you can take over. Thank you.
We have some more questions in queue. We'll take a next question from the line of Arpan Mundra from Wilson Financial Services. Please go ahead.
Hi, sir. Congratulations on your numbers. So my question is that, are you planning on hiring more traders, and could you tell us how much capital do you allocate per trader?
Hiring a trader is a continuous process as the demands come. So the things is like this, we keep on doing some R&D on strategy side as the requirement comes from the team leaders, then we keep on hiring the traders. And as far as the capital allocation is concerned, that depends on the kind of strategy the new traders are required for. So this is a very regular process. So capital allocation happens on the periodical basis, as now we all know that we all are going through big change from the regulation side. So we are a little bit slow on the hiring side, but in a month or 2 months the things will stabilize. We'll definitely go for the more hiring, and allocation will happen as per the strategy requirement. It's a dynamic process. It's not fixed like this much capital will be allocated to a trader. It's a dynamic process.
Thank you, sir. So another question was that, do you have any projections up until when the proprietary trading will be the biggest revenue contributor for the company?
Sorry, I didn't get it.
So do
you have any?
Yeah, I didn't understand the question. Can you please repeat your question?
Yeah. So do you have any internal projections up until when you think that the proprietary trading will be the biggest revenue contributor? So you were talking about diversification, right? So up until when the proprietary trading will be the biggest revenue contributor?
Okay, but up till when it would be the biggest contributor? So,
yes,
if you look at our, I understood it. So, if you look at our project, the kind of volumes that we have been doing and giving our presentations, the client-based turnovers has been continuously increasing. So, a year back, just to give you a perspective, a year back, the exchange level turnover breakup for client and prop was almost 50-50, and we have closed this year with a client-based turnover with almost 67% for the whole year, and for March month it was 80%. So it has been continuously increasing. But one thing that you need to realize is that in a client-based business model, you only get the broking part, and the proprietary, you get the entire trade revenue that you do on the exchange. So the proprietary that way becomes a very big chunk. So in a broking, you get only a very small component of the income of the total exchange turnover, while in the prop, that exchange level turnover directly goes on to the P&L. Of course, the cost also goes as well. So as I said, we started the year when we were doing client business revenue breakup of around 20-22%, and we have closed it with 30%. The quarter 4 was around 35%, and we believe even with with only the broking component being a very small part of the entire scheme of things, we believe that in another 2 years or so, prop will become a very small part of the entire scheme. Even while growing at the pace that it is growing, will become a small part of the entire piece of the strategy of Share India.
Thank you. We'll take our next question from the line of Bhavik from CRISIL. Please go ahead.
Hello. Yeah, hi. Congratulations, for a really good set of numbers. So my question is, as we have decided to foray into the retail segment in a couple of quarters, so what I wanted to know is what are we doing exactly to grow ourselves, on the digital space? For example, Share India Securities is not a household name that every person is, has heard of this name. So what are we doing? For example, Zerodha and Upstox, they are all household names. So we don't have like a YouTube channel, which is very prominent, or, even an Instagram page. So are we also looking to probably grow ourselves, on that space so that, it is easy for us to acquire customers?
First of all, there is no comparison between Zerodha or like with us. We are playing to our strength. Algo trading is our strength, and strategy-based trading is our art, which we are doing it for last 12-15 years, and we have mastered that technique. Even the retail expansion is focused mainly on the algo products. So first of all, I thought let me clarify that we are not in a rat race. So and we are insulated. So we have specialized products for which there will be special demand, Now, in this volatile market condition, for last 2 years, there has been one-way move before few days. So people have made money in whichever stock they might have invested. But this may not remain so. So whenever there is a volatile market, then the algo will protect, and the strategy-based trading will help them to earn steady income. The purpose of introducing algo to the retail investor was to see that they don't get into speculation. They earn something like 10% to 12% on their margin, which effectively comes to around 15 to 20% on the actual cash deployed, and this will make their money safe and also insulate them from the risk of the market. So this is a unique product which will have a unique kind of customer profile. The profile of customer also would be significantly different from the kind of customers you have in discount brokerages. So I thought, let me clarify this, and to add to this, I would request Sachin ji to add some point, if I missed any.
Yes, sure, sir. Sir, as you said, yes, you're right that Share India is not a regular household name. But as we explained that we whatever the clients we have, that's our legacy business. So we are about to launch our retail product in Q2 and second product in Q3. So the idea is definitely a huge marketing strategies in place where YouTube channel, all the social media activities, website, everything will be done in a channel manner, and hope so if everything paid off well. By end of this financial year, you will see that in last, when we'll have a final call on the last of the FY23 numbers, you will definitely see that Share India will be a known name in the major circles of India. So we have a detailed strategy in place. Execution will start in next quarter or two.
I would just like to add on a couple of points. I fully appreciate that you are talking about social media. We understand the importance of social media in today's digital world. We have started the process of digital transformation, but digital transformation is a journey which essentially involves, building pillars, creating the structures in place wherein you can create those products and everything, and then building scale upon it. So we are currently in stage 1. It's only when we complete the stage 1 wherein we have an Instagram channel, but we create the kind of content that we want to push through it. We have a YouTube channel, but we create the content to push through it. It's only once we have done that you will start realizing the work that is being going on internally and behind the scenes. But having said that, we don't want to compete directly head-on-head to the household names that you have just mentioned. Our strategy is very simple, that we might not be the biggest market player when it comes to the retail, but we would be a player who would command a premium and who would have a proper unit economics in place before they go to the market.
Okay, that's really helpful. So my only suggestion was, I completely understand the points mentioned. Since we have 6 months, to roll out the product, I was only hoping that, possibly in the next 6 months, we can grow our online presence so that it's only easier for us to acquire, the customers when we enter into the retail segment. I'm not talking about the competition with any of the discount brokers, but I think that we should also do something on the online space.
Yes, sir. Point well taken, sir. So we do have a YouTube channel. If you see that there's some activity that is already going on, we do have an Instagram page. We have started these endeavors almost 6 months back, but we want to push through it much before it. So the digital transformation, so the way it happens is you launch a product, stabilize the product, and then you go full bang on the marketing. We don't go full bang on the marketing right now and create an online presence and then realize that the product is not working. Right. Okay. So the marketing part of it will follow the product and not the other way around.
Okay. Thank you.
Thank you. We'll take our next question from the line of Anand Agrawal from Balaji Investments. Please go ahead.
Thank you so much for giving me opportunity. Hello. Am I audible?
We can.
Yes, please go ahead.
Yeah, my regards to Sachin ji and Abhinav ji.
Yeah.
Hello.
Thank you, sir. Yeah,
Please,
thank you,
sir.
sir.
Please
Can you hear me?
Yes, we can hear you.
Yeah. So, just, I mean, as we have already, most of the questions have been answered, but just want to know one thing, how would you differentiate the business model of Share India and your subsidiary Utrade if you compare it with the Angel One and Zerodha?
Sir, as we explained earlier, see, our vision was, what was the vision when we, joined hands with Utrade and the technology company? The vision is very simple. Next 10 years should belong to India, and the companies who have a right technology behind their back will be able to adapt the new changes in the market. So next 10 years will be like, broking entities or broking business will be a tech-based business rather than a traditional broking business. So we have now Utrade behind our back, Algoware behind our back. Both are our subsidiaries now, and extremely efficient and experienced people are running these companies. So whatever the changes and new challenges are coming, so we are able to adapt and counter those challenges with the help of the technology. So what we are building a product which should bring a lot of change in the attitude of the retail investors in India, where they don't need to come up with daily calls like buying a Tata Steel or selling an Infosys or whatever. They will be able to use the strategies to earn their bread and butter. So that is a change we will bring, which we see. Look at the combination. The company who is having a 25 years of experience in trading and the company who is having a more than decade experience of developing products, they both are together. They are under one roof now. So when we bring up the product, having expertise of both the separate companies, then that product can change the attitude of the Indian investor. So we believe that will differentiate us from others. And as a trader, as we know the importance of backtesting system, importance of simulation, importance of easily codable systems. So we are bringing all the things on the table which were our pain points. So once those things will be available to the larger public, they will be able to use these things from their mobile phones. That will change the attitude of the people. So I think that technology, new products, having a large trading experience will be a differentiating point for Share India. That's my point, if anyone want to add.
So I'll just add on, with a lot of questions that are coming in, I'll just like to say that you might not see in the foreseeable future Share India's name when it comes to the maximum number of accounts that are opened in a month. So whenever you see what all accounts are opened, Share India might be a very small player. But as I said, we are focusing more from a very long-term perspective. We are bringing out products which are premium in nature, which helps customers solve a pain point, and which are not pure play vanilla heads-on competing with other broking products is what our strategy is, and not being a pure play normal service broker.
Well explained. Two more questions from my side. One is that, we have seen from last 2 years since the inception of COVID, there has been a buoyancy in the market and the retail participation increases substantially. How do you see going ahead when during the time of turbulence, as we are seeing the deeper market correction? How do you see the business going? Is there any effect on that the top line growth or kind of that will get affected due to this scenario?
Sir, Kamlesh sir, you want to answer this question?
Sorry, you can answer and then I'll edit up.
Okay. Sir, definitely, as we explained that the kind of growth we were seeing was unprecedented. Markets have doubled in terms of customer participation and more than 2 or 3 times in terms of turnover in last 2 years. This was unprecedented. This kind of growth cannot continue. So things have to consolidate at some point. 2 reasons. One, new regulations from the SEBI, which need some time to get adapted. Second, definitely some market volatility. So things will get slowed down a bit, but in larger aspect, we believe that participation will keep on growing, but definitely the percentage of growth will go down. So that's why, as we said, that we don't want to be a single product company. So if you see, products for the HNI, see why Share India is a favored, broker for the HNIs, because we provide them the sophisticated technology they require, the services they require. So we have seen a great growth from the large HNI customers, SPIs, as explained by Abhinav. And secondly, prop desk. Third, retail. Now again technology for the retail, NBFC, insurance. So Share India is overall a bouquet of different financial products. So we believe that yes, there will be some slowness in the growth of the overall industry, but yes, growth will be there. But that slowness will also be for the time being. Eventually, once the things will be adapted, like Sir has explained, broadly Indian economy is doing good. So we should see that growth will be on track in quarter 3 or quarter 4.
See, here I would like to add that the power of retail investors we are experiencing for the first time. And no one would have expected the growth of Demat account from 4 crore to 10 crore as of today. And going forward, all the experts believe that in another 5 years, this number can grow to 25 crore. There has been selling by FII from April 21 up to now of almost 2.5 lakhs crore. That has been entirely absorbed by retail investors. Now, there are new age investors who are joining the market. They include housewives, they include students in higher education, they include IT professionals who are working from home, and they also include some businessmen who don't have any means to deploy the extra fund that they have. All of them have turned to share market. The number is growing and it is growing fast. There are no other instrument which could beat the equity instrument. So the confidence is increasing. Now, we are reaching to tier 3, tier 4 cities, and penetration is deep down the line. Only thing that has changed is consolidation, which has happened in the industry. There is change in the way we do business. There have been a lot of regulatory reform which makes the market and the investor a safe place. So all these measures taken by the regulator in last 2 years has generated a lot of confidence among the investors. And I believe that whatever current situation is, that is a temporary situation. We have almost come out of the COVID era. So there is great, according to me, there will be larger number of people who would be participating, and with the new products and the technology that we have, the reach has become, far-reaching. So, in fact, the year 1970 belonged to Japan, 1980 belonged to USA, 1990 belonged to China. I think 2020 onwards, it is belonging to India. India is seeing robust interest among all the international players, and we feel that the temporary issues which are surfacing will be able to come out of it. As it is, the financial parameters are showing robust growth prospect for India, and I believe there will be reasonable opportunity. And ultimately, it's a game of photo finish. If you do, it's a competitive world, I agree. So when you are little better than the competitors, you would definitely gain much more than the others. So we have positioned ourselves, we have prepared ourselves, and we have taken initiative to see that we maintain the growth momentum that has been created over the last 3 years. The exact amount of growth is difficult to predict, but we are prepared, we are ready. Thank you.
Thank you. So that was the last question. I would now like to hand the conference back to Mr. Sachin Gupta for closing comments.
Yeah. Thanks all the investors or everyone for joining for this con call. I would like to thank everyone, like shareholders, our staff members, our vendors, everyone for their continuous support and tireless work. Sir, your support, your belief on us is our motivation, and which keep us going. And we promise that at Share India will keep on working very hard and will be coming up with the innovative products and try to make Share India a more sustainable company rather than depending more on the market performance. So, like we all know, the fourth quarter was the best quarter ever we saw in our history, and we believe that we'll be delivering same kind of growth in the coming years. I hope everyone will be supporting us like this, and all thanks to our shareholders. And that's it from my side. Thank you very much, everyone.
Thank you. Ladies and gentlemen, on behalf of Antique Stock Broking, that concludes this conference. Thank you for joining us, and you may now disconnect your line.